Joe, it seems like it's a real risk-on day out there, but nobody's really told the VIX. Vol's still pretty firm, barely down much on the day. What do you make of that? Is that more, we still got payrolls Friday ahead of us, or is this more about what's coming late in the month that we still, will be waiting for between Trump and Xi?
Yeah, the market's had a tremendous risk-on day, not only today, but ever since Tuesday for real. And the VIX has kind of stayed up there, elevated, like you said. I think there's a big event tomorrow. Of course, there's a job report. The market's kind of waiting and see. And beyond that, like you said, there's not only with Trump and Xi, there's also Mexico. There's just trade war after trade war. It seems like we're lining a new one up as soon as before the previous one even gets completed. So there's a lot of headline risk out there. So that's one of the reasons why the VIX remains elevated.
And Joe, I'd like to get to your trade now because it's a part of the market that often volatility is fairly low and mispriced. It's also something that's been called a barbarous relic. Tell us why you're bullish on it.
Yeah, I'm looking at gold and I'm looking at the inflationary aspects of potential rate cuts and also trade wars. So, of course, on Tuesday we saw a big run up in gold. People were responding big time into the Fed comments, saying that they'd be ready to lower rates should the situation arise. And we saw that in gold. And you really look back at the past 8 years, gold's been in this tight range. 1380 on the upside, 1180 on the downside. I think if there is a rate cut, we would have to be able to propel beyond that. And if you actually go back in history, look at previous times the market has cut or the Fed has cut rates, 2008, 2001, there was a really big run in gold after that. And I think it's really just the inflationary trade. And my trade, just as a portfolio management standpoint, would be to have a small portion of your portfolio into gold, into something which would protect you against an inflationary environment.
And there, you see it's a December trade, so obviously you've got some time for it to work. So what do you expect the market reaction for payrolls tomorrow? What do you think the market's looking for as a good number?
I think the market's poised to respond positively as long as it's anything but a catastrophic number. One thing the market might not like would be high wage growth that could be seen as inflationary. Could be a sign that Fed maybe can't cut. I think that would be bad for gold. I think anything else, the markets and the gold market's also going to respond very positively. Going to respond that the Fed is there to step in and lower rates. The Fed's there to keep rates low as long as there isn't the wage growth.